What up with the wheelhouse, baby? You guys ready to hit it? You ready to get it? You ready to level up and get with it? Well, it's time to charge the batteries and get that money printer out because we are headed to the moon to stack some chips and get paid out. Now, on this channel, no baby stepping, no line stepping, no habitual line stepping, no loose talk, no second thoughts, and definitely no maybes. And like I always say, green lights to the beach, baby. So look, we're going to talk PayPal. And the other day I bought PayPal, and I told you guys, I said, look, I'm not comfortable buying this under the 200. And I also said, this is not quite my most technical entry. But I did buy it. I thought the floor was going to be like 222. I even said in it, do you guys really think this thing's going to 207? I really didn't think it at the time, but then I thought back to this thing that I read in a book once, and it reminded me. I actually went back through that book today, and it reminded me. It said something like this. In 2008, during the financial crisis of the Lehman Brothers debacle, Citigroup, all of them, right? There was a big dip. This is why we don't buy the dip. Okay, this is why we don't buy under the 200. I should smack myself in the face sometimes. I gotta listen to myself. If I listen to myself, I always do better. But I FOMO'd. I wanted to PayPal. I like PayPal. It's a big company. It's a juggernaut. But a few things have dawned on me in the last day or so. So I went back to this book, and I had to find the chapter. And it reminded me, it said, during the financial crisis, people, they thought, oh, I'm getting bargain basement prices on GE. So they bought it in 2008. And that sucker went down 95%. After a whole drop from 2007 to 2008, they got their deal, and it dropped another 95%. So even the biggest, best companies in the world can drop. Microsoft went all the way down recently. Visa's went under the 200. Disney under the 200. Facebook under the 200. These are big companies. My last video, I went on to explain how Apple and Facebook and Amazon and PayPal and these big companies are starting to miss either on their earnings, their revenue, their sales, their guidance, their margins. Something is amiss. And that is a warning sign. That is an indicator that the velocity of spending is slowing, that the stimulus is running out. You couple that with chip shortages, people not going back to work. And people are going back to work because we have the jobs report, so we know that people are going back to work. But there was a time when I was saying that, there was a time recently when that was moving slower. So they're just now getting their employees, and they weren't before as quickly as they needed it. So I mean, these things all work together, and they create problems. And PayPal owns Venmo, and they struck a deal with Amazon. Now, Venmo has never really been profitable, and everybody's been waiting for it to be profitable. PayPal's, trying to be an integrated payment platform that is not only functional and efficient, but user-friendly and available to the world everywhere, on smartphones, tablets, websites, and they truly are a very, very big company. I am not freaked out or worried, and nor did I sell. I actually got rid of my stop loss as well. I don't know. I bought under the 200. Shouldn't have done it, right? I did buy technically about $3 above where I thought, which I didn't wait for the bounce for the confirmation, so I screwed up there. And then I woke up this morning. I was so groggy. I actually slept in. I woke up 15 minutes before the bell, and I saw that it was down like $13, and I was like, yeah, right. This is gonna bounce. I'm taking my stop off. Yeah. So $4,000 down later. Whatever. It's all good because I can ride it. I'm a believer in PayPal, and I'll admit I made a mistake, but I also am okay with it. there, in the markets, there's always an overreaction. Now, I do think that this thing, you never know where it's going to fall until it does this whole thing where it comes down and then it creates a little guy and it changes to bullish momentum, and these red ribbons turn into, beautiful, gorgeous blue cheese on the ribeye ribbons. Okay, right now we don't got no blue cheese. Okay, we got like, blood in the streets. It's not looking too good. And look at that wick and that volume, and this is nasty. It's just nasty. I don't even know what. It's the only one in my whole portfolio that just looks like a poop taco at this point. Like, I don't know what I'm doing with PayPal right now. This is why you don't FOMO. This is why you don't buy under the 200. This is why you don't buy before it validates a bottom. Use me as an example for your benefit because I did what I never do and what I preach about not doing, and I did it. And it is what it is, and I'll own up to it. But at least I did it with a company like PayPal that is in mutual funds and, pension funds and institutional holdings. And, it's a very large company, and it's doing well. Now let's just take a little quick peek at some things with PayPal. Now, here's the deal. It beat on its earnings per share at 3.13. So that's good, right? Okay, and its miss was actually quite small, at less than 1%. So again, overreaction is what I was thinking. Now, look, I'm going to let's play a clip for you from Yahoo News, and they can describe a little bit about what's going on with the sentiment and with the Amazon deal, and then we're going to come back. We're going to take a look at the report. We're going to take a look at some charts, and then we're going to take a look at where it could go, what we should be doing, and if we need to pull the parachute, or if we just need to load the bullets and just go out with a bang. You know what I'm saying? So let's see where this goes. All right.
Let's take a look at what some companies are reporting earnings-wise, some other companies that we haven't talked about as of yet. PayPal is one of those companies. The company coming out, overall payments volume up 26% to $310 billion. That, though, was a little bit lower than had been estimating. The company said this year, overall revenue is going to be up 18%. That's lower than its prior forecast. And all of this sort of tepid numbers overshadowing an agreement with Amazon that's going to allow Venmo wallets to be accepted on Amazon starting next year. Those shares down by 7% this morning.
Yeah, the market is not liking really, would say one number. That is the operating margin for PayPal. That was down 103 basis points year over year. The market doesn't like that. It's not something you would normally see from a PayPal here. Hopped onto the earnings call with Dan Schulman late last night, and he is saying that macroeconomic forces impacted this quarter and likely weighed on their operating margin here. But Julie and Emily, really, that Amazon deal, it could be pretty important for Venmo. Keep in mind, the street has long wanted to see Venmo be profitable, make money, and it could be that this deal with Amazon now takes it over the hurdle, and Venmo becomes a profitable entity inside of PayPal here. And I wouldn't be surprised if investors go back to this Venmo deal and just stay more upbeat on PayPal than we're seeing here in the early going.
Well, absolutely, Brian. And I think the Venmo-Amazon deal is also going to be important because we've been seeing that the eBay shift away from using the PayPal platform has been something weighing on their overall total payments volume for the past couple of quarters now. And I think that was a big factor that contributed to the third quarter total payments volume coming in a bit light compared to consensus as well. Julie, we're noting that number at about 310 billion. And if we take a look at payments volume related to eBay's marketplace specifically, that was down 45% in the third quarter. So hopefully going to see a little bit more of an acceleration here with Amazon. And of course, that deal does kick off at the beginning of next year.
Yeah, so we'll be watching if that ends up giving a lift to PayPal in the longer run, even as those numbers that we talked about weren't necessarily what investors would have hoped for.
So I don't know if you guys noticed what I noticed, but did you see the guy there? Did you see how sad his eyes were? Didn't his eyes look sad like mine? Like he owns PayPal too, and he did like a stupid thing, like buy the dip. Like, think about it, man. Something goes down, And it's like, oh, it drops through the 9. You should be out. Oh, I kept it. I went to the 20. You should be out. Goes to 30, the 50, the 200. You're buying the dip. You're averaging down. You're like Jimmy and Beyond Meat, the diabetic story. Remember the guy, Jimmy? He goes to the doctor. He's like, yo, Jimmy, too many beers, too many burgers. You're diabetic. Here's some medication. He's like, shoot. All right. So he goes down to the Costco and he basically goes in the fridge and he's like, I'm gonna get me some Beyond Meat. And he goes home and he cooks it, and it doesn't smell good, but it tastes okay. And he kind of is like, oh, I'm going to get healthy. So he starts lifting weights, and, he's kind of feeling good, and he's getting healthy, and he's learning about it. And now he's like, oh, this is like disruptive. This is plant-based. This is really good. So, he starts talking to his buddies, and his buddy's like, yeah, man, I bought Beyond Meat at like, 163. And he's like, oh, really? So he goes and he opens up a little brokerage, and he's like, I like Beyond Meat. I believe in this disruptive plant-based, right? So he gets there, and it's like 140. He's like, that's a deal. My buddy paid 163, so he buys it. And then it drops $13. It's $1,300 per every 100 shares. So he buys some more. And then it goes down another $10. And he buys some more. Now it's below the 200 where everybody starts to short. And it goes down to 109 and 98 and 94. And before you know it, Jimmy can't even buy any Beyond Meat for himself because he's averaged down buying the dip so many damn times that he can't even afford to buy Beyond Meat. And now Jimmy is super sad and he's on suicide watch. That's why we don't buy the dip, okay? Because we don't know where the dip ends until it validates the bottom. And I think I'm going to talk myself into smacking myself in the face because I said in that video, I don't think it's at the bottom. We need to wait and validate it. I bought it. I should have never FOMO'd. But here's the deal. It might be an overreaction. We don't know. It could go all the way down to 196 and then 180, 183, 180. I don't know. But I'm already, the way I'm looking at it is I'm in too deep. It's like The Godfather, or no, it's like it's like The Godfather. Once they just never let you out, man. They just never let you out. You know what I'm saying? So basically, I'm in, and the only thing I know how to do when I get in deep in a situation like this is either get out at 8% loss, but now I'm at a 10% loss, so I still have a chance to get out, or I could just like double down. I don't know if that's good advice, because one thing that you should never do is add insult to injury. Like if you're already going down with the ship, like it's never a good idea when you're going down and you're in the negative to buy more and damage yourself even more. Like that's never, ever, ever been a good idea from any professional trader in the history of man. That is just not smart to do. Averaging down is just not smart to do. It's not, in every book they'll tell you that if you just read a book about investing and trading. And you can dollar cost average technically in investing, but buying something like this under the 200 is probably not the smartest thing. I mean, what I probably do realistically is I probably will double down and do the exact opposite of what I'm supposed to, but I'll do it correctly. I'll wait till this thing hits whatever floor it goes to and bounces, and I might even let it come up and come back down for the double bottom, the double dabble do ya. You know what I'm saying? And then off that double dabble do ya bottom, when it pings back up, that's when I'm going to come in with the wheelbarrow, and I'm gonna get it like it's hot. You know what I mean? And then I might even like do more. Like instead of like the 200 shares I bought at 226, maybe instead of doubling down, maybe I'll just buy 400 shares and I'll go like heavy duty on it and pray and pray. Take a lot of melatonin at night. Drink a few cocktails maybe too, just to ease the pain, because I made a mistake. I'm not going to lie. My portfolio never does this. My vortex is out. My stochastics run. I technically buy. I'm always making money. My stops protect. Some unknown reason, I got up late today, and I took a stop off, and it just got worse and worse and worse. And I've seen this like a million times. Like it's just not the thing to do. And the reason I'm talking to you guys like this is because, let's face it, I know that you've done this before too. Okay. And I'll tell you what, I've done this before too. It's just that I haven't been doing it recently for quite a while. And those old habits, baby, those old habits, you gotta get rid of them, okay? Listen up. This is how you get in trouble in the stock market, the crypto markets, when you don't listen to your own rules. You have to listen to your own rules, guys. I am serious. Serious as a heart attack, right? All right, so look, the revenue wasn't that bad. The earnings did beat. And did you hear what she said? They gave guidance that they're going to go up 18% more. But yet that doesn't meet future estimates of Wall Street. They're growing another 18% from where they're at, and they didn't even miss. But it's still going down because analysts expected more. That's the tricky thing about the stock market. And you guys probably don't know about that on YouTube, but I'll give you a little tip. In the courses, I explain what the minimums are for the beats to stay safe and not have this kind of stuff happen to you during an earnings. But that's all like deep in the courses. And congratulations for all you guys in the courses, by the way. You guys are learning real fast over there in the Jedi world. And we got some new Jedis coming in. So 4 or 5 hit me up, and they're all coming in. So we got some more coming in today, and that's pretty cool. Look, I pulled up this Argus report. I subscribe to Morningstar and Argus. I get the reports on every company. I'm kind of a nerd like that. I used to print these things out and have like each quarter and stuff. But look, PayPal, here's the deal. I'm just going to give you the snapshot, okay? It's a buy, all right? 12-month, 5-year, and sector. It's overweight in the sector. All right. It's currently at 2.0. I don't have it in front of me, but I think it said 205. Their target, and this came out today, by the way, is 310. And I said in the other video, I think it's going to go to 310. So we're right on line. And this just came out today, so it's not like this came out a week ago before earnings and before this. It is overweight. They're saying 27% of total percent of S&P market cap. Here's what they were talking about. Their earnings per share growth forecast was 18.56 and 12% on average over the next 5 years. So, I mean, I've read a lot of these reports. That's not a bad report, guys. That's not a bad report. So let's hope it's an overreaction. Let's hope it finds a floor, and I'm probably going to double down. Hopefully you guys, took my advice in the last video and just put the stop at the 221, like I said, and all is well, and you're just laughing at me right now, which is fine. It's fine. You guys can laugh at me. I made a mistake. I'll own up to it. But, yeah, so let's see. We got our PayPal over here. Go look at the chart. Let's go see what we can see. All right, so here's the dealio. Where'd it end? It ended at 205.42. This line of resistance right here is 207.25, so it came under that one. This is 204.54. It's right above that one. All right, look, tomorrow or today, sorry, because I'm recording the day before, if this thing does not close above this line, I'm going to give you some bad news. If it does not close above $204.54 today with a green body candle close or even a red body candle close above that line, the bad news is this thing most likely is coming to 183.23. I mean, I told you Tesla was going to 1256, and it was until Elon decided to sell some stuff. And then I got on here and I said, look, this thing's going probably down to like $1,000, which I'm pretty sure it's pretty close to that right now, right? I don't know if I have Tesla in this particular watch list. But yeah, I mean, I told you guys where Bitcoin was going. I said it was going to go here, and it did. And I said it was going to retrace there, and it did. And I said it was going to go sideways, and it did. And then I said it was going to close here. Or I said if it closed here, it was going there, and it did. So look, I'm telling you, if it doesn't close with a red or green body candle close above this 204.45 today, this thing has a shot. I mean, there are some mini ladder steps. I mean, it's a possibility it could hit that 198.16, but really from there, I mean, you're just looking at this 183.59. and then there's other ones below it. So nothing is happy with the PayPal chart, technically. That sucks, man. Do you know this thing gave up all of its gains from the entire year? And this thing was making some serious gains. It gave up all the gains. That's pretty crazy for a company like PayPal to give up all the gains. But remember the GE story, and remember the story about Microsoft and Intel, that if you didn't sell it, if you didn't put a stop loss and sell it during the crash of the dot-com bubble, it took you 10 years to get 1/3 of your money back. 1/3 of the price it was 10 years prior. GE, you saw it go from 2007, 2008, you thought you were getting a deal, and it went down another 95%. This is the kind of stuff that happens under this purple line. This is what we like to call hell. Okay, you're supposed to be like shorting the market, shorting PayPal right now, not buying more and averaging down. So I made a mistake. I either cut and run tomorrow and I just lick my wounds at 10% loss, or I wait for it to hit the floor and I double, triple down. And it is what it is. And that's like the deal. So, sorry, it's not better news, but here's the thing. Like they are growing, and they are a big company, and they are loved by institutions and banks and funds, and they're not going anywhere. They're not going bankrupt, and they barely missed revenue by less than 1%, and their guidance is good. It's just not as good as analysts. One last thing I want to look at for you real quick. All right, so check this out. Let's go over to tip ranks. No, I'm not upgrading right now, okay? So look, tip ranks on the average has it with a 42.12% upside to 291.95. I said it was going to 310, and Argus thinks it's going to 310 as well. They got a high rating of 350, an average of 291.95, 42.12% upside. There's only one sell, 2 holds, and 21 buys. I mean, that's kind of why I'm conflicted too, because I feel like it's a buy or a hold myself, and I don't think that it's gonna, fall apart. I mean, these things rotate, and remember, PayPal's in Bitcoin now. They have Venmo. They're on like every website. I mean, they're like the biggest payment processor for e-commerce, and yeah, I mean, think about all those eBay transactions. I mean, they're growing, so it's like if I gotta wait, like it's not the end of the world. If you gotta wait, it's not the end of the world, because it's not like you're holding like some bootleg company that like has no earnings and no fundamentals and may go out of business next year. It's not like that. PayPal is big. It's an iceberg. It's a juggernaut. You're okay if you hold it. It's just not my normal style. My normal style is buy the bounce technically, run it up, move those stops up, and then usually catch 4, 5, 6, 7 good days, and then when it comes down, it just stops me out. But I kind of went into the PayPal trade as kind of wanting to move it out of my trading portfolio and into my long-term portfolio, which apparently is happening on its own. So I'm going to leave you with that. I love you. Welcome to the wheelhouse.